We're about a week here into 2021, and not too soon to be looking back at some of those big IPOs last year. You can say last year now. One of those being Airbnb, trading at about $142 a share. We got new analyst coverage on the travel and I guess hospitality company here, if we want to call it that. And there's 20 analysts here that have reports out on Airbnb to start the year. About a third there predict that Airbnb will be worth more than where it's trading here. And one of those analysts who does see that as a $170 price target a share. Joining us now is Jefferies Analyst Brent Thill. And Brent, good to have you back on, man. It seems like you'd be in the camp that does see this as a stock that can kind of play both sides of the reopening trade, since, like my family, it was an area where we said, all right, let's go to an Airbnb over a hotel to be safe during these times. So talk to me about why you see 170 as a fair price to watch.
Airbnb is obviously an incredible asset. They get most of their traffic organically. They don't have to pay. I think they're synonymous with alternative accommodations. And when we look at the Airbnb opportunity and experience over the next 5 years, you go back to effectively an opportunity that is more than just staying at a place. It's about the experience, right? So how do you get a chef? How do you get a guided ski trip? How do you get other things around that experience when you stay? Ultimately, they're going to layer in, more hotels. So part of, the experience of going to a remote place could be related to, hey, you got to stay at a hotel. So they're thinking about all these other forms around the overall experience and not just the alternative accommodation. And we think that overall experience is what travelers want now. And we think they're ideally positioned, for that move.
And on that front, Brent, you said that you think Airbnb can return to profitability by 2022. What do you think is going to be the big catalyst to help the company get there? If you look at where it was pre-pandemic, there were a lot of things that were being added into the mix beyond accommodation. There was the experiences element. There was also talk of potential flights being offered too. Is this thesis based on the company really focusing and doubling down on accommodation alone?
Yeah, we think accommodations is the primary driver, and then you have all these side businesses that they can layer through that makes sense. You think about, right, you can go from the lowest end and stay in a trailer home all the way up to a luxury house in Montana with guided everything. So when you think about what they can do, they can stretch this concept of what an experience is, and ultimately adhere to whatever your budget is where you want to be. And so we see a great opportunity at the high end of the market. We wouldn't be surprised to see them layer in a complete experience around the flight, the hotel, the alternative accommodation, the experiences. Your mind can wander with what they can do at the high end. And at the low end of the market, we already know what they're doing, right? They're letting you rent a tiki hut or an Airstream on a coastal California ledge looking at the Pacific Ocean. So I think there is an incredible opportunity. They are number one in their space. Their competitors are lagging. The experience is far less superior on other platforms. And again, I think they have built a very strong culture, which is, basically helping the renter make money and helping the guests have a great experience. And we think they're ideally positioned, again, in this environment where the next 6 months, no one's really going to be traveling to hotels. Given what's happening with the pandemic. Now, as we exit, they will be able to capture, obviously, some of these other forms of travel in the back half of this pandemic. And we think the biggest question right now is just the multiple. It's an expensive stock, but as we know in tech, expensive stocks have been working. And the best fundamental franchises are the ones that produce the best returns for investors.
Yeah, I was going to ask about that point too, because as I said, about a third see the price being higher here than $140, or at least giving them buy ratings compared to where we are here, which would mean, of course, 2/3, the majority would be against the position you have there. If we think about downside risks, is there potentially something to be said about maybe a return to people wanting to choose hotels over Airbnbs once travel begins to resume, maybe perhaps due to some of those pricing pressures in the space, or perhaps even regulatory concerns there as well? I mean, what is it to you that might be some headwinds that need to be considered by investors?
Well, if you want to go back to a hotel, remember they bought Hotels Tonight. So they have a hedge on hotels with that business. We think that's a really innovative platform, and they're going to probably lean into hotels as they come back up online. Today, right now, no one wants to stay in a hotel and get in an elevator next to 5 other people. That's the last place you want to be. You want to be in your own place, protected for your family and friends that are in that accommodation. So I think, look, the concerns for us going forward really are multiple. Number one, and across tech. Number two, would be the return to profitability and demonstrating that they can get there by 2022. Number three, clearly Expedia is sitting on a phenomenal asset with Vrbo. They have screwed it up. Okay, it is not a great experience. They have not driven that business to where they could, and they have a new team that's trying to light that up again. And we'll see, again, there's other competition that can come into the market. There's local operators. If you go to Jackson Hole, you can find a local operator outpost to rent a house. You don't have to go to Airbnb, right? So there's local operators. There's regulatory overhangs in every major city they operate. I mean, you cannot today, for example, in Lake Tahoe, rent a place for a couple nights. You have to rent for a month. So every region has their own regulatory overhang, which they're good at navigating, and we think they can get through that. So there's plenty of risks, but we think, again, the opportunities outweigh the risks.
And finally, Brent, when you think about how Brian Chesky has been able to steer the ship during the pandemic, the work from anywhere trade or work from anywhere trend has been a big bump, given the company a big boost. Where do you expect that to go? And is that going to continue to be supportive of the business? This notion that people aren't necessarily going back to the office and that they can work from a new environment from month to month?
I think we're all learning we're more productive at home or wherever we want to be. It doesn't matter where we work, it's how we work. And we think that plays right into Airbnb's thesis, which is, you could be in Jackson Hole, you could be in Florida, you can be wherever you want right now and get your work done. It doesn't matter. And so I think ultimately this is another tailwind for work from anywhere, where employers now, including my own, have said, we don't care where you're at, we care about the work you produce. And if you're more comfortable in a non-office space and you produce better work, have at it. So we believe that trend continues, and we think every major corporation is buying into that. Yes, we will go back to the office. Yes, we will have central meeting spots, but I think the world has changed. And this isn't the first pandemic that's going to hit. It's not the first, we're dealing with a lot of other things that are happening in our world. And ultimately, I think those trends are supportive of the Airbnb trend. And you think about it for local communities, the income and the opportunity to create commerce is incredible. And I think ultimately, when you talk about the associated economy that's created around Airbnb, whether it's hosts or chefs or experience guides, you have an incredible economy that they're spinning off of the Airbnb ecosystem, and we think that is a really good thing for these local economies.
Yeah, it's going to be hard for a lot of us who have been able to work from home to give up some of that flexibility that's come along with that. Jefferies Analyst Brent Thill, it's good to talk to you. Really appreciate your time.
Thanks for having me.